Laura, great to have you here. Wow, what a twist and turn. I mean, what now? What options does she have left?
Really, we need a new reality program in here, Kelly. Like, mergers that collapse is my pitch for the new merger. She has to do something. We have 3 CEOs in the office of the CEO, and there's no Harvard Business School case ever that says 3 leaders is better than 1.
Totally.
So she actually doesn't have a CEO in place. So she needs to do something. And, this walking away after 6 months of wasting shareholder and Skydance's time really may rupture a relationship with a critical partner for Paramount.
Who else is left as a genuine possible suitor? And whoever's going to get these assets now would presumably get a much better deal, unless there's some ace up her sleeve that I'm not understanding.
No, I would guess. So we're hearing in the press, of course, that Edgar Bronfman, backed by Bain, might be a bidder. I think Apollo will come back at a lower price because she's in a disadvantaged point of view. I think shareholder litigation was always probable here. So the fact she broke the deal over potential litigation is ridiculous because it was always a risk. It didn't just pop up now. It's 6 months in. I think the problem we're seeing is self-made billionaires like her father are used to making difficult decisions and having them work out. That's why they're self-made billionaires. She has inherited wealth, and she's not used to making these risky decisions.
It's an interesting point. And the market cap of this company is about $6.8 billion now. And people say they owe $30 billion just to the NFL. Is that true?
I think that's too high, but those rights, I would assume they could license to somebody else. Those rights they could lay off to Amazon or Apple. So I'm not really worried about that contingency, but they do have $14 billion of debt. And the debt markets, basically the equity is worthless if they can't pay the debt, the interest expense and the principal payments on the debt.
Right, exactly. Okay, so let's step back and say there might yet be some gambit that she can use here to get herself out of what appears to be backed into a corner. What other possibilities might there be?
I think maybe she'll approach Warner Brothers to see if they'd be willing to take over for shares. That might be interesting for her, which would push off her tax consequences. Maybe like a strategic. Maybe she'll try to take a more active hand in who she's selling to. But it sounds like she's going to try to minimize her litigation risk, which would mean public shareholders will get a better deal than all the deals that have been talked about so far, which gave her an advantage compared to the public shareholders.
That's a great point. Although, if anything, you wonder if the litigation risks are higher just because of everything that's happened. Okay, let's put that to the side, Laura. While you're here, what do you make? I haven't checked Apple shares yet today. 6% yesterday, 205 on this kind of delayed enthusiasm over the AI announcements.
Yeah, it's our thesis that Apple is in the market buying shares, that because they have a $100 billion share repurchase and they're very excited and they're in a developers conference all week, that they want to make the market feel like, they have really exciting things going on. No institutional investor I talk to is excited about what they announced at WWDC. So I think this is Apple supporting its own share price because it has a $100 billion share repurchase authorization in place.
So many people are saying that, it's Apple in the market and it's Apple. But I'm like, why would they go in with shares near an all-time high and make some big buyback? Okay, maybe it is them, but it just seems like a convenient explanation.
Well, it could just be they have a lot more faith in their future than institutional investors do, right? That's possible. They have real limited periods where they can buy shares of their own stock. One of those periods is right now, right after WWDC, where they've announced everything to the market and they can be in the market today. And then like 3 weeks before the end of the quarter, like in a week from now, they go into quiet period because of the June quarter results. So they sort of only have very limited, like 2 weeks a quarter that they are not restricted for buying their own shares. So they're buying their own shares right now, we believe.
Look at it again today. It's up almost 5% to 217. This stock is up 10% in 2 days. This is extraordinary. Apple's had share repurchase programs for a very long time, but I haven't seen a 2-day move like this in a long time.
That's true. And it could be that the developers really like, as they go through the meetings with the engineers, what they're going to like to be able to do on their own apps in the iOS ecosystem. Wall Street's sort of got a bigger point of view, which is, does this drive an iPhone replacement cycle in the next 12 months? And even if app developers are excited, they'll then roll out apps over after the September launch of the new phones, and then they would come to market the subsequent year, which would push off the upgrade cycle, let's call it. So Wall Street cares about the upgrade cycle timing, not so much maybe the excitement that developers are having right now about what they're going to be able to do on the Apple the new Apple phones.
This is fascinating. Laura, thanks for being here for all of it. We appreciate it.